What's up everyone, this is Arnold here. You might be Canadian and you're seeing all of these stocks hit flying new highs. GameStop, Rocket Mortgage, Square, Tesla, all to name just a few. And you might ask, how do I get in on that? Well, I'm gonna tell you 4 ways to invest in the US economy and the stock market as a Canadian. And it's not just buying US stocks, there's several other ways to indirectly invest in the US stock market. I'm gonna list this list in terms of increasing financial benefit to you. So the first way is gonna be the least financially beneficial, and the last way is gonna be the most financially beneficial. So with that said, let's get started. But first of all, let's ask ourselves, why do you wanna invest in the US stock market in the first place as a Canadian? You've got all these great companies here in Canada, why do you wanna go down south? Well, the answer is twofold. The US economy as a whole performs better than the Canadian stock market. In the last 10 years, you're talking 14% for the S&P 500 versus 7% for the Canadian stock market. And secondly, in terms of individual stocks, you've got all these great growth companies that exist in the States. The FANG companies, Tesla, Square, etc. Companies that really are the greatest companies in the world and that are growing at an increasing pace. These companies also have a bigger market from the get-go. The US is 300 million people versus 30 million people in Canada. And these companies usually cater to a worldwide customer base. As an example, if you're in Spain or Antarctica or anywhere in the world, you're probably using Google Search, a search engine made in the US. Okay, so this is the first way to invest in the US stock market. And again, this is the least financially beneficial method for you. And this is to directly buy US stocks. And this is usually available at your broker. TD, for example, has a US brokerage account that's in USD, such that you can buy and sell US stocks. While it's simple, you can directly buy US stocks from your Canadian bank account. It'll just do the conversion fee right then and there. And this is the least beneficial because these brokerages usually charge anywhere from 1.5 to 3% in terms of conversion fee. So every time you buy a stock, a US stock, you're paying at least 1.5% more. And when you're talking big numbers, big trades, this really adds up. So this is perhaps the most straightforward way to invest in the US economy, but also the least financially benefit to you. The second way is to buy Canadian ETFs. These are ETFs that are in Canadian dollars, but that are pegged to the S&P 500. So this means that you can buy these ETFs from your Canadian brokerage account, but these ETFs invest in the US stock market. Generally, they track either the S&P 500 or the NASDAQ, anything that these ETFs choose to track. Examples include ZSP by BMO, VFV by Vanguard, or VUN by Vanguard as well. The issue here is that it fluctuates based on the US dollar and the conversion rate to Canadian dollar. Let's say the Canadian dollar gets weaker compared to the US, then you'll minimize your gains or amplify your losses based on the conversion rate. The next way to invest in the US stock market is to invest in these Canadian ETFs that track US stocks, except that are hedged for the Canadian dollar. Examples include VSP by Vanguard. So this is hedged against the movement of the Canadian dollar against the US dollar, and the movement of the currency relative to each other would not impact the value of the ETF. But it's a whole can of worms. There's a bit of complication there depending on whether the Canadian dollar moves up or down. So we'll get into this in a future video, so subscribe if you want to see that content. And the fourth and the last way to invest in the US stock market is to buy dual listed stocks. What that means is that these are essentially US stocks that you can purchase from a Canadian stock exchange. A prime example is Shopify, which is both listed on the Toronto Stock Exchange and the New York Stock Exchange. The reason why this may be the most financially beneficial to you is that these are essentially companies that have heavy US operations or even global operations, except they're listed on the Canadian stock market. Think Shopify, for example. A huge percentage of its customer base is based in the US and around the world. And by investing in these companies, you're buying a Canadian stock essentially, so there's no currency conversion overhead. Another example here is TD or several of the other banks. These all have huge banking operations in the United States. The issue with dual listed stocks is that you've got less of a choice. The other options I just mentioned either invest in the stock market as a whole, or you can pick from the widest variety of US stocks. So that's it everybody. These are the 4 ways to invest in the US stock market as a Canadian. And again, in the order of financial benefit to you, the least beneficial being directly investing in US stocks. Second is to buy Canadian ETFs pegged to the US stock market. Third is to buy Canadian ETFs pegged to the US stock market but hedged for the Canadian dollar. And the fourth and the most financially beneficial is investing in dual listed stocks. So I hope you learned something today. If you think this might be useful for someone else, please feel free to share this along. Like and subscribe if you like this content, and I'll see you in the next video.